You already know from previous tutorials that an investment in the stock exchange is supposed to be a long-term transaction and that you're supposed to spread your investments. This is exactly what the core satellite method recommends, since it works on the principle of not putting all your eggs in one basket. This strategy enables you to divide your securities portfolio in two parts. On the one hand, the core portfolio, and on the other, a smaller but actively managed satellite portfolio. The objective of this strategy is to mix a fairly stable, broad-based portfolio, the core, with a more volatile one, the satellite. This is creating a portfolio that gives you, in addition to a certain degree of security, a more attractive return than the broader market.
In general, it is recommended that a core portfolio accounts for approximately 80% of the entire portfolio. It contains stable stocks that should cover a broad market and should be managed passively, which means that the permanent stocks in this part should not be constantly traded. To achieve this, we can work with funds and/or ETFs that invest in other asset classes. If interest rates are sufficient, it is entirely possible to invest a portion in bonds. In such a case, of course, investments should be limited to large caps with a solid track record. As for the second part of the portfolio, the satellite portfolio, investments can be more speculative. But beware, the term speculative does not mean investing blindly in the first company that comes to mind. This part should be monitored on an ongoing basis and actively managed, which means that once an investment ceases to be attractive, it should be sold. Ideally, the satellite part should include various positions in order to maintain its flexibility. For this part, the various investment possibilities, for example sector and geographic allocations, currencies, commodities, precious metals, etc., should be considered.
The prerequisite for making investments using this strategy is, of course, to be actively interested in the financial markets and to look after your portfolio with a certain degree of consistency. For the satellite part in particular, it is essential to set precise objectives and actively monitor any changes. But the main portfolio must also be analyzed in depth from time to time. Don't hesitate to contact our advisors and visit our website for further information. Good luck with investing!